Yeah. Okay. Can you see the screen and the sound? Okay. All right. Okay. Very good. So let's start. Okay. Tonight we're going to cover a lot of symbols and let's start from gold. All right. Okay. So for gold, we can see that the recent rally has been stopped for a while because you can see here this is a quite big retracement, all right? And in the last week, I have already told my group members to short gold from 1341, if you remember. I think Ling has taken the trade, right? Yeah, because we saw the very nice structure broken and the retest, and yeah, yeah, and I think this is a very nice trade because we not only found a structure breakout and a pullback, and we also found out uh, inside bars, right? Yeah. So this is an inside bar breakdown as well. So basically, you can have two entries. The first entry would be the pullback. Okay. The second entry would be the inside bar breakout, and you can see here there's another inside bar breakout here, right? So actually, this actually give us three times of trade that we can catch a nice fall, right? And our target has been hit very nice. Is at a 1326 this place, right? This is our target. This is a support structure. So basically, we have made about 140 pips for this trade, right? And then I have published another place for us to catch the short again, which is actually we found out this potential bad patterns, right? So these bad patterns will give us a very nice entry point if the gold did uh, make a retracement to 1343. And in fact, I think we can actually short from 1341, right? But based on the current situations, we can see that in the 1 hour chart, the gold actually has a bullish patterns as well. We can see here, right? This is a potential bullish patterns here, okay, and it has already completed, right? So right now, all right, 1324 is a very strong support, right? Here has a support level, right? And we can potentially catch a buy, right? Till 1336 and 1341, right? In the of course, there's a condition to be put for this trade is the gold cannot break 1319, right? So if you want to buy the gold, you have to set a stop loss at 1319, okay? So we can buy the gold from here, from 1324 for 25 level, okay? Buy from here, aim 1336, stop 1319. This is still a 2-to-1 risk reward trade, right? If we measure, right, still about 2-to-1 risk reward trade. And right now, if we find out in here in this place, okay, you can see the gold is coming down, right? It's coming down, and there is a potential a new bad pattern here, which will be like this, okay? Yeah, it's coming. It's going to complete soon. Oh, okay, it's coming, right? 1324.10, right? 1324.10. You can consider buy. Actually, now it's 1324.78. If you don't mind this $2 difference, right? You can start to buy gold right now. Okay, buy gold right now because it has already given you a very nice entry point. Okay, based on the bad pattern, based on the previous this patterns, right? The gold has already find support from 1324. Okay, so we can start to buy gold right now. Okay, anyone? Have you bought? Yeah, we can just quickly calculate how many lots you should enter, right? So if you buy from 1324.75, stop loss below 1322, all right? So it's about $2, right? $2 risk. So $2 risk, if you buy one lot, you are going to risk $200. Okay, so for a 10,000 account, right? Let me repeat. Okay, if your capital is 10K, and we each time we use 2% for our loss, all right. So for gold, 20 pips risk, okay, and times 100, 100 ounce, right? 100 ounce for gold, one lot. I'm sorry. Let me just okay. This is $200 our risk. And if you buy one lot times $2, 100 ounce for gold times $2 difference, which will be one lot. Okay, so that is how we calculate the lot size. Okay, so basically, if you buy, if you buy gold from 1324.75, stop less than 1322. Okay, then you buy one lot, you're risking $200, and the target, the reward will be at least $4. So 1324 plus 4, which will be 1328, something like that. Okay, so here we already catch a very nice buy. Okay, and if upon the target is hit, you can consider to take here you need to take 0.5 lot. Okay, TP, the TP is 0.5, and then you hold the rest, hold to 1336. Okay, hold to the 618 level, or even to the bad pattern level, or even to the 1341, this neckline here. All right, so this is a very nice trade. We have already captured this trade. Okay, reply me one if you have already entered. Right, guys, we have to be very quick, because you see the price. We just give you the entry, and right now it's already going up. Right, and if you buy one lot, right, you're risking $200, which will be acceptable. And at a 1328, please take some profit, and then the rest hold to 1336, 1341. And when the pattern was completed, okay, take a short from here. Take short from here. Right? Done? Okay, good. So I think we have already made our first trade today, which will be gold, and we have already bought. Any questions? Yeah, let's talk about the long term, right? Long term wise, in 4-hour chart, we have to measure some Fibonacci levels, right? The first level I'm going to use, which would be this leg, okay, from here to here, and back to the origin. We can find that, okay, the gold has been reversed from the 1.272 and 1.44 extensions, right? And hereby that we can see that there's potential cipher patterns, right? Cipher patterns, okay? Cipher pattern tells us that the gold may have to retrace 78.6% of the entire X to C, okay, X to C, that is 1291.964, right? So our strategy is we want to sell the high, from here, okay? We already take a buy from here, we buy first, and when the target was hit, we take a short, and then all the way we hit the entire fall from 1339 to 1291. That is about 400 pips. Okay, so that will be our long-term strategy for gold. Anyone have any questions? Isn't it good that we use harmonic patterns to capture a very nice selling point, and then we hold these positions all the way till the other bullish pattern completed? Do you have any idea that what is this? What is it? Why we took this bearish patterns and the bullish pattern? What is the name in our course? Do you remember? If you remember that in our courses we have already taught this for a long time ago, and in my webinars, in my courses, we already give you this. We already mentioned this, right? It's actually in the day 2, right? It's in the day 2. In day 2 that we know that that is a pattern combinations. Do you remember? Hey, guys, and it's Paul, Lane. Do you remember pattern? We have a course that is called pattern combinations, right? So this is called what is a pattern combinations. We use the bearish pattern to catch a very nice short, and we use the bullish pattern to take profit of the short, and you want to take a buy or take another round of a swing. Okay, this is how we do a swing trade, right? Yes, fractals, yes, also, yeah. Okay, all right, let's move on to oil. Okay, the oil has already hit the price zone that I have mentioned you guys yesterday, right? I said that we want to take a short of oil based on the 618 and based on the structure here, the neckline here. Let's take a short, right? Good. So we take a short from 56.72. Our stop loss should be put at the bearish candles, the origin of the bearish candle, which will be 57.51, right? And our aim is the previous low. Okay, our second target will be the 1.618 extensions of this leg. Okay, you can use this leg as extensions. All right, so 618 is 53.27. Okay, so this is also a very nice trade. Okay, if the oil can stop the rally from here and we can capture a potential very nice fall. Okay, almost 200 pips. Okay, and now let's go to 30 minutes charts. What you can see, guys, what you can see here. We know that 56.72 is a potential reversal point, and let's check the price actions. Yes, and we find that the inside bar was formed and was broken down, right? Okay, so inside bar down and retest, right? You can see here. You can see here. Do you see the wick? Okay, the wick is telling you the inside bar was retested and now forms a long pin, right? So if you haven't entered the oil trade, you can enter now. Okay, you can enter now. Okay. Right, so this is a inside bar breaking down and retested. Okay, and now you can enter a short. Okay, because it is actually a confluence. We know that the oil is likely to stop the rally at the 618 level, and now we did see a price action 30 minutes chart at the price action told us, yeah, there is a setting force here. So inside bar breakdown, you should take sell, and a retest, you can also take another sell, right? So let's just take a short of the oil, right? Are we clear? Okay, because the oil has been rallied too long. Okay, it's from 42 to 57, already 1,500 pips, right? And now it has already broken this entire wedge. Okay, the wedge was broken, and this is my favorite pattern. Okay, the wedge broken, find a 618 and a short, and you will have a very nice profit, right? If you are clear, if you understand, please reply by 6. Okay. The stop loss for oil is very clear. I have already told you to put at a 57.47 above the bearish bar's origin point. You have to put a stop loss here because we don't want to see the oil to have a new high. Okay, we don't want to see this happen, right? So once it breaks new high, you have to stop. Okay. Okay, but this is a long-term trade because the oil has the potential to fall to 52 level. Okay, you can capture about 400 pips for this trade. Okay, because the wedge was broken, retest 618 is a perfect time for us to catch a second and fall. Right, just remember this pattern. The pattern was so useful. Okay, was so useful. Right, right. And now let's have another thinking is when oil is going down, what happened to the dollar Canadian? So you have to make these correlations. When oil goes down, what happened to Canada? Dollar Canada should go up, right? Okay, let's check. Let's check. You see that now the dollar Canadian in 4-hour chart has been sit nicely at 1.3117, right? This level, this structure was tested last time and make a very nice rally. Now it comes back again, and there is patterns here to give you that okay, the dollar Canadian may have a very nice buy from this level, right? So what you should do is if you haven't taken the oil trade, you want to take the currency correlation, okay, you have to consider to buy the dollar Canadian now, right? Stop loss below 1.36. Okay, 1.36. Okay. And now we see the dollar Canadian. Did you guys find that this is in the same direction with oil? Do you agree? Do you agree? Because dollar Canadian was under support and oil is at the resistance, right? Oil cannot going up anymore, so dollar Canadian we can consider to buy from here. Stop loss below the X point, that's okay. And then after the dollar Canadian make a very nice reversal, what we could see is the price may go up and break the neckline, right? This is neckline here, okay, and then form a double bottoms and price continue rally to 1.35. Okay, why did I draw this point? Because we know that there is a bearish patterns, right? Again, this is a pattern combinations. There's a bearish pattern here. Told you that yeah, the dollar Canadian may have a support from here, so we can consider buy from the bullish pattern, and we want to TP at the bearish patterns at 1.3559. If the price did go with that is a very nice red. Okay. So if you want to capture this chart, please do so. Okay, take a screenshot of these pattern combinations. I do think this is a very nice trade for this month. All right. Have you done the screen capture? Yeah, if you have already done the screen capture, I will move to the other pairs. Okay, good. Let's go to euro dollar. Okay, the euro, okay, formed ABCD patterns. Okay, in the daily chart, this is ABCD patterns, right? Okay, and our strategy is to buy the ABCD patterns here from 1.1 to 37. Okay, stop loss below 1.1217. So if you have already in the trade, wow, that's very good. Okay, and now the euro has already been rallied till the 618 level, I think, almost here. But we don't want to take a short. Why? Why we don't want to take a short from here? No, no. Neckline is here, is here, is here. Not yet touched, because we know that the recent rally has formed a bullish channels. Okay, this is a bullish channels, right? So when bullish channel start, right, you want to short when the bullish channel was broken. When right now it's still in the bullish channels. So the potential for the euro that's continue going up is still very high. Okay, and what we can do is we want to buy the pullback. Okay, let's go to 4-hour chart. And I will tell you why we should buy the pullback, because you can see here this is a previous necklines here, right? And we can see that the price break up and retested, and the buyers has already been moved from the previous low to here, to here, and to here. Okay, so we know that the 1.1340 now has very strong support. If this level was hold, the euro may still goes up. Okay, so we want to buy. We want to take a buy right now until it touched to maybe this place. Okay, 1.1440. Right, it may penetrate the 618 level because the bullish trend. Right, so and also you want to, you can actually take a, can connect the high and the low, or can take draw this channel, and when you see the channel was broken, right, only short when the channel was broken and retested. Before that, okay, don't short euro because it may is still in the uptrend. Okay, you only want to short when the price make a downfall. Okay, make a downfall, break the channel. Before it break the channel, don't take a short, take a buy. Okay, because in the bullish trend, always buy the pullback. Okay, buy the pullback. You may still have ready. All right. And another thing is, okay, we have to use the Fibonacci level. Okay, because for the for this ABCD plus the butterfly patterns, right? It tells you that the price may go to 1.1440, as I mentioned. And guys, can you can we actually connect these 2 points to draw a resistance line? We can, right? So if the euro breaks up this trend line, what will happen? What will be in your thought? It will actually going to tell you that this triangle was a reversal, right? It's a reversal because the price failed to make a lower low and it makes a higher high, right? So then you should focus on to buy the pullback, and maybe the euro can rally for another time to 1.17 here, this place. Okay, so this is how we look at the chart. Okay, so actually this 2 point was quite critical because it forms a high and the lower high. So this one we need to put a question mark, guys. I need you guys to put a question mark here. At this time, can the euro break up or not? If it cannot break, okay, then our short from the neckline will be valid, and you can actually consider to take a short when the trend line was broken here. I said this is a bullish channel, right? Okay, you can take a short from here. Otherwise, okay, the other scenario is if the euro breaks up, you should find a buy. So that is a very, very critical area that you should look at, which will be 1.14, 1.1427 or 1.1410. Okay, can you guys understand? So we have two scenarios. Scenario A is it cannot break, and then you take a short after the bullish channel was broken. Scenario B is when the price breaks the triangle, you need to find a place to buy the pullback, right? It's either a short or a buy because we want to know that which directions of the euro is going. So now, do you agree that 1.1420 is a very, very critical place? Yeah. As a trader, we need to find out this critical price zone, right? Let me repeat, critical price zone, okay? Because above the zone and below the zone is totally different scenario, and your strategy will be totally different. You have to know that when are you going to buy the pullback or when are you going to sell the pullback, which will give you a very, very different result. All right. So are we clear for euro? Are we clear for euro? Okay, good. Let's move on to sterling. Okay, you see sterling is going up and sterling is in a bullish, right? And last time when I said we want to buy the sterling at the here, the neckline here, okay, buy the pullback at 1.28, right? Pullback here, okay. So in the daily chart, it also this is a very beautiful 2618 trade because we had see that this is a double bottom, okay, a double bottom created, right, and the price falls down to 618, but you need to neglect this long pin because that is due to the crash, right? And then you should put a 618 from here, and we know that yeah, it comes all the way to 618 and it comes and form a very nice rally. Okay, so don't short sterling, it's still bullish, right? Try to find a pullback to buy from here, from 1.3218. Okay, this is the place to buy the sterling, all right? If the price pulling back to here, because we know that a new high was created. A new high was created by the pullback to enjoy the next wave, right? For the sterling, it may comes to this place, which will be the 618 of the entire move. Okay, 1.36.50. Okay, so just to get ready, the sterling still have a lot of potential room to go up, right? And also, if you find out this is ABCD patterns, right? Can you see that? There's a potential ABCD patterns. Can you see that? It also tells you, oh yeah, it's going to 1.3520. Okay, so use the ABCD, use the 618 to give you a target of your buy, and then you consider the short. Then only when the sterling rally to this place, you may consider to take a short, take a reversal. Otherwise, you have to keep keep your mind to I want to buy, I want to buy, I want to buy the pullback until the price rate to 1.35 or 36. You hate GBP, yeah, because GBP is quite hard to trade in the recent months because it has a very long ping, right? Going up, going down, wipe out your stop loss, right? But you still have to make your chart clear and simple and to respect the patterns that showed. All right. Right now the pattern was clear. The ABCD pattern was very clear. The 618 is clear. Okay. So the structure breakout and the pullback will be very useful. Right. So this is my intention for the studying. I don't want to short. I want to take a buy from the low. Okay, take a dip, buy the dip. Right. Okay, let's go to Aussie dollar. Okay, the Aussie dollar looks like hit. If you remember in my last webinar, I asked you guys to short from 0.72, right? Remember? Last time when I would do the webinar, I said the Aussie is in a bullish and may touch the 0.72. Do you remember? Right? So this gives us a very nice profit from last week, right? You see, once the price hit 0.72, straightly it falls down 120 pips. All right, and now it's the second time test here. It still gives you, oh, okay, this is very nice rejections. Okay, rejections. So what you can do is you can find any pullback to sell Aussie again. Right, the pullback maybe you can relies on these three candles, 1, 2, 3, because we have a support from here. Okay, support, and support. This is just similar to gold, right? The gold has the three candles, stays above 1341 and it breaks down and pull back, right? So now the Aussie, you can also take a short from here to enjoy the next fall. Okay. Right, so Aussie, find the pullback to short, aim 0.71, all right? Until the price hit into this place, okay, take profit, right? 0.71 has support, all right? So now Aussie is in a range, it's in a range, very narrow range, 0.71 to 0.72. So it's up to you whether you want to capture the selling high or up to you to capture the buying low, right? But again, just remember 0.72 is very strong resistance, 0.71 is strong support. So you can find opportunities to catch the high sell or the buy or the low buy. Okay. Any questions for Aussie? No, right? Okay, good. I move on. Okay, dollar yen. Okay, dollar yen. I said it's an uptrend channel, right? And it's touched the 111.20, and now do you find that the dollar yen has a very nice inside bar here? It's very nice move plus the inside bar and breakdown, right? If you have trade this inside bar, okay, so here is actually a very nice example of how inside bar was trade. Okay, we find out the inside bar, it breaks down, we take a short, breaks up, we take a buy. Okay, it breaks down, you take a short, stop loss above 111.19. Okay, so it actually gives you only how many pips here? Oh, it's only 20 pips, right? From 0, 1 to 19, 20 pips move. Okay, so 20 pips stop loss, you actually can capture a 1, 2, 3 reward. Okay, and then going to this place have a support, 110.40 have support and takes now forms a bullish engulfing. All right, so what you can do now for the dollar yen, okay, is you can consider to short at the 618 level here, which is a 110.89. Okay, you can consider short, take a short at here. Okay, because now it may tells you that this is a strong resistance, and now comes a 618, may form a lower highs of dollar yen. All right, so wait dollar yen to 110.90 and take a short, stop us at a 111.24. Okay. All right, so this is how to trade dollar yen, because I think the dollar yen will have a fall until 111. Oh, sorry, 110. This place. Okay, the dollar yen may retrace to here. Okay, and until here, you need to find out whether it formed a top formation or head and shoulder or whatever, but because this is a neckline, okay, this will be a potential neckline. So you can take a shot from here and hold your target to here. Have you already covered the oil? Yes, yes, the oil has already been covered. We already said we can take a shot from oil, stop loss above 57.50 and aim 55 and 52. Okay, long-term trade. All right, good. And let's go for Kiwi dollar. Okay, Kiwi is weak recently, and it's actually similar move to Aussie dollar. Similar move to Aussie. Okay, so here is a Kiwi chart, right? Kiwi also have a very nice short from 0.78. Okay, this neckline cannot go, and now it also have a bullish patterns here. Okay, tells you that 0.7670 is here has some support. So right now it's just a break the neckline, right? So find a short to sell Kiwi dollars, right? You give a very nice profit. Okay, from 68.75 to 67.90 maybe. Okay, 100 pips move. Okay, so Kiwi is still in the range. Kiwi in the range. Okay, sterling is up. So I'm going to tell you guys sterling Aussie. Okay, sterling Aussie will be a very nice trade, guys, because it looks like after the after this four, okay, sterling Aussie will going up, going up, going up. And right now, remember my word, GBP is bullish and Aussie is range, right? So my question is, what will happen to GBP Aussie, guys? Answer. I need your answer. You need to think. Sterling is bullish, right? Aussie is range. Aussie is not going down or not going south. But at least we can say that Aussie is not in a very bullish zone. Okay, so sterling Aussie still goes up, right? And look at the chart. Sterling, wow, it just today just breaks new high, right? Breaks new high. Okay, and I don't think the previous 1.87. I don't think this point is going to hold this time because in the long-term weekly chart, you can see that wow, the sterling Aussie is making a very firm bottoms, right? Firm bottoms, break the neckline, pull back, and it goes up again, right? And there's only one place for the sterling Aussie to hit, have resistance will be 1.92 or 1.90. Okay, so the sterling Aussie will have a strong move. Okay, so what is your intention? How are you going to trade the sterling Aussie? Buy or sell? Buy or sell? Buy, right? But we don't want to buy the high. We want to buy the low. We want to buy the pullback, right? So let's go to 1 hour chart to see. Looks like, right? If you want to buy the pullback, you have to wait for this place, 1.85. However, now we have a price actions that is we have taught. So we have mentioned a lot of times. What is this? What is this, guys? Inside bar, right? Good. Let's actually you can take a buy right now. This inside the bar. Your stop loss will be just below 1.8597. It's only about 30 pips. Okay, you can still buy the inside the bar, right? And I tell you that it's still going up. The momentum is so strong, right? Inside the bar, we need to catch the momentum. Okay, have you seen the momentum going up? Flats going up, right? In the 4 hour chart, still bullish, right? So go, go, go for the sterling Aussie. Okay, inside the bar, you can go now. Just go now. Just break. Go. And how many lots you should trade? You need to measure the risk. Okay, 960 to 25, 980, 95, 90, 85, 97, about 25 pips. So you add the spread about 30 pips. So 30 pips, $200. Maybe you should trade 1.5 lots, maybe. Oh no, 30 pips. Sorry, it's actually 200 divided by 30 to 300. Okay, 0.66. Sorry, I made a wrong calculation, right? So we can risk 200. The risk distance is 300, so about a 0.66, right? Take a buy 0.66 for every $200 risk. That is for the sterling Aussie. Stop loss below 1.958597. buy now. We see now we have a profit already. Easy. So inside the bar plus the big pictures look, you know that the sterling Aussie is strong bullish and the sterling is going up. Aussie is range, right? Yeah, aim. You can aim 1.90 maybe. Okay, aim 1.90. It is still going so strong, so strong. Okay. Have you completed trade? Have you entered? Give me your answer. If you have already entered 0.66 lot for $200 risk, yeah, give me 5. Again, I'm not telling you guys that every trade I give you is winning trade, right? We may encounter some loss, right? But you have to follow the plan. Okay. If our stop loss will hit, okay, take the loss, take the $200 loss. If we have a $400 gain, take the profit as well. But just follow the plan. Okay, follow the plan. Yeah, strong bullish move inside bar breaks up. Why not? Okay. Any more pairs? Any questions? If no questions, I'll move down to the SPX. Okay. For the SPX, now something looks interesting, right? The channel is still there. Okay, the channel is still there. Okay, and I said the 2,800 display has a very strong resistance, right? Looks like now the bullish and the bearish force has been quite clear. So what you can do now? If you remember in my last webinar, I said this 2008 resistance plus this uptrend move, we have a squeezing, we have a triangles, right? Okay, now it has already break the triangles and still respect the 2008 resistance. And if you look at here, 2 pin bar has already formed here. It tells you that 2008 have strong resistance. Okay, so what we can do now is we can use the 618 again, right? Okay, try to catch a short from here, 2008, right? The 618 level plus the structure plus the 2 pin bar tells you that you should take a short from 2008. But before that, before you take a short, what you can do now is, now can you find there is inside bar breaks up? Can you see that? So can we take a buy first? Can we take a buy first and we take a profit to 2008 and then we take a short? We, instead of selling high, can we buy first and take profit and then we change to sell so that we can catch 2 trades? Is that good? Do you agree? We buy first and we sell the next move so we can enjoy the both profits, right? So go for it, right? I think today we have quite a lot of trade, right? Just within 30 minutes we have already discovered maybe 5 trades. Okay, so this is power of how you learn the patterns, how you learn the other analysis from me, so you can have these eyes, you can have these abilities, okay, capabilities to find good trade, right? Maybe you will be surprised. Oh my god, how come when every time when Jack make a webinar, why he can find a good opportunities in a very uh restricted time? Yeah, because I have been trained for so many years and I know that, yeah, these are the patterns that I can rely on, right? You see the inside bar breaks up is very nice, right? You still move up, okay? So you buy first and take profit at 2008, okay? And then change to short if the price action is good, right? And then enjoy the next 4. Interesting. Okay. All right. Last but not least, let's go for the BTC. All right. The BTC has a very strong rally and it touched the 3008, the structure. So let's go for another buy here. Okay. Yeah, this is a perfect time for you to buy from 3008. Okay. Yeah. And I said, yeah, structure breakup and retest. Okay. Buy from 3008. Right. The next move is there. There will be a next move because the long term wise, this big consolidation is completed. Okay, so breaks up, pull back, buy for it. Okay, this is the neckline. Okay, buy the neckline. Okay, that's why I don't want you guys to buy the high. If you buy from 4,002, wow, that is terrible, right? But now it's good. 3,008 is good. Okay, and my target not changed. I'm still aiming the BTC to 4,006 and then 5,004. All right, I think 5,004 will be covered, will be touched in the next few months. Sure, thank you, AB. Right, so that's I think basically have covered a lot of things. Okay, maybe let's go for the ETH as well, the Ethereum. The Ethereum is same thing, still have a yeah, the neckline is here, so 1,300. Sorry, 135.557 will be a good buy, and it has already touched. So now you can still buy the Ethereum. Okay, buy some, just buy some. Right, the upside room is there. Okay, is there 107 and 194. Okay, 194. Silver. Okay, silver will be very similar to gold. So if you want to sell the gold, sell the high in silver, you can already sell from 16.20. Look at the pin bar here, right? Okay, just sell, just sell. The silver is good to sell. 16 is very strong resistance. Okay, put your stop loss above 16.30, right? Just sell. It will fall down to 14.80, this place. Okay, and until here you can take a buy, right? Very easy trade. Okay, so you know what's going on and you want to take a sell or take a buy, right? Based on the price actions, based on the resistance structures. Okay, based on the gold, you want to sell the high, so why not sell the silver since the silver has already touched the previous high? Yeah, just go for it, right? And now you can see here, yeah, this is a kind of inside the bar, right? Inside the bar breaks down. Good. Also, okay, yeah, I think we have covered almost. Oh yeah, natural gas. Okay, natural gas, guys. Okay, is easy. It's easy. 2.5 is a strong support. Okay, now the price has already make a double bottoms, right? And now it's pulling back. So my intention is to buy the natural gas at a 2.7 here. Buy from here, the neckline here. Okay, or maybe you can use the 618 as well. You can find a 618 or 2.65, but I think from 2.7 is okay to buy already. Okay, so natural gas, try to buy from 2.7. It may give you a very nice rally to $3. Okay, $3. XRP. Okay, Ripple, right? It will be same. Okay, Ripple is in the range. Ripple, the neckline here, 0.30. All right. So yeah, you can see my structure is still there. Breaks up, pull back to 0.30, you'll buy. Okay, now it's in a range. So you're trying to find a good place to buy your Ripple, maybe at a 0.31 here. 0.31 will be good, or maybe 31.50 is also good, right? But generally speaking, all the crypto is bullish. Okay, all the crypto is bullish. Okay, just a buy, right? Okay, so I think that's all for today, and don't forget to follow my Facebook group. Okay, you can go to Facebook and search for ProJack Trading Classroom. That is my Facebook. You can actually find it in my signature in Trading View. Okay, and also I can search for ProJack here. Oh, sorry, I need to. Yeah, this is blocked. The Facebook was blocked. Okay. And also, if you want to learn how to trade like me, how to find out all the patterns, okay, ability to understand how the market moves, how to buy the low and sell high, how to identify profit patterns, right? Join my course, okay, and become my students. Okay, I will teach you how to learn the harmonic patterns and the structures and the entire philosophy, the trading philosophy that I have, okay, to analyze the chart like me and take the good trade, find a good trade like me. Okay, so join my course today, and you know how to. Okay, you can learn it anywhere. You can learn it from online. All right, and I will be your mentor for your trading, and our webinars you can understand more, you can benefit more from the webinars, right? Because you know that what I'm talking, you know what kind of patterns I'm drawing, right? So yep. Okay, so end of this class, and I hope that you enjoyed this webinar. I'm trying my best to send the recordings to YouTube after this. Um, so have a nice trade for this week, and plan your trade, trade your plan. Bye bye. See you next time.